Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Thursday, August 1st, 2013. Well, a continuation of the trend to the upside today, and a candle that has made a higher high and a higher low. A very large white body candle, a very bullish candle. And exactly the type of candle that we were looking for a break of the 700 round number level of resistance. This candle denotes the buyers making a significant amount of net bullish progress on the day between the open and the close, and suggesting that the buyers have found some very substantial upside momentum. They've also closed the market with control and have been in control of this market for basically the entire day. And the assault on the 1700 in such a manner does suggest that a very strong possibility of the market trending to higher levels. If this market does come off from here, obviously the area around 1700 and perhaps just below will act as very strong support for this market now. In terms of the Fibonacci extension, we're examining the relationship of this first time frame uptrend to the previous time the market was trending up, and here today we've seen the market trade in a very strongly bullish manner above the 100% level. It does suggest that this market is destined for higher levels, and our target is the 161.8% level around 1719. Previous day's trading, there was a possibility of a change of trend to the downside, and we had that strong price rejection from above the 61.8% level for the second consecutive trading day. The sellers had taken control of that market, but we were looking for confirmation of that change of trend, and therefore a lower high and a lower low, and that never happened. We saw strong bullish activity up above the high of that candle, suggesting that there was no possibility of a change of trend. And now today we're seeing the buyers come back into this market, where the sellers weren't terribly strong throughout this attempted sell-off, and now the buyers are certainly dominant in this market once again. In terms of the Fibonacci retracement, we are now in an expansive mode of that. We've traded through the 100% level in a bullish manner. Our next target is the 161.8% level, just above where the market's trading. That's at 1712. And we do need to watch how the market reacts to that level. If we see bearishness coming into the market, it may suggest a possibility for the market retracing and perhaps retracing back towards that 1700 round number level of previous resistance that may hold as support. In terms of patterns, and here we've seen the breakout to the upside above this wedge type pattern, and if we recall, I suggested that it may have been likely that we'd see the breakout to the downside, but obviously that hasn't occurred. We've had confirmation of the pattern now. As I've mentioned, it wasn't an ideal pattern. The extent of the trend leading into the pattern was really disproportionate to the size of the pattern, but now with this solid bullish close up above the top barrier of the pattern, we have a target. It's the width of the pattern at the deepest level, projected up from the breakout, and that gives us a target roughly up around this area around 716 to 1720, and just above where the market's trading. So not a good pattern to be trading in terms of the target, but it's likely that the market will meet this target. In terms of Ichimoku, obviously a bullish market in all three timeframes now, and that's what we were looking for today's trading. We had the market attempting to trade down through the Tenkan-sen, and we'd had these three probes down below, but all on candles that weren't totally bearish. The final trading day we saw the sellers close with control, and we didn't see the market substantially retrace back towards this area of the highlighted yellow zone, and the failure of the market to close significantly down below that Tenkan-sen suggested that the sellers weren't quite as strong as they should have been in this market, and suggested that if the buyers could find some solid upside momentum to trade through the 1700 level, we'd see this very strong trend that we had seen previously continuing on its way. Now, in terms of the Ichimoku cloud, we are trading a fair way up above there, so the market's bullish in that long-term time frame. The market is looking very overextended, so it wouldn't surprise to see this market come off again, but solid support around the 1700 net level now may limit any retracement that we see in this market. As we move further into the next couple of weeks, the level of the cloud will actually move up to meet the market, and that's important because it means that the market does have the possibility of finding equilibrium at higher levels, but that's a long way off before we may see the market interacting with the cloud. In terms of the Kijun-sen, the market is trading up above the Kijun-sen. So we have a bullish market in that medium-term time frame, and that Kijun-sen is pointing up very, very sharply, reflecting this very solid upside momentum that we've seen in the market in terms of the series of higher peaks and higher troughs, and now today confirmation of another peak, continuing that trend to the upside. In terms of the short-term time frame, trading now well up above the Tenkan-sen in a bullish manner, suggesting that this market is bullish in all three time frames, and the checkout span here is above the corresponding price action, so confirming this bullishness and suggesting that this market has great potential to trade to higher levels. Our targets are those Fibonacci areas. We do need to watch them as the market interacts with them, but very, very solid bullishness in this market, and expect the market to trade to higher levels.